Good afternoon. This is Sean Golding with Golding and Golding, here to discuss the very basics of how to report foreign income on your U.S. tax return. So, generally, as a U.S. person filing a Form 1040, whether you're a U.S. citizen, legal permanent resident, foreign national who otherwise meets the substantial presence test but doesn't qualify for the closer connection exception, you have to report your worldwide income. So, for many clients, for many taxpayers in general, they may have money overseas. They might have earned income overseas. They might have interest income, dividend, capital gain, royalties, rental income. Why don't we kind of go through some of the basics of passive income and get an idea of what needs to be included and what needs to be reported on your U.S. tax return each year. So let's start with interest income, foreign interest income, right? Because that's the most common. Plenty of people who are U.S. persons, whether they live in the U.S. or overseas, have foreign bank accounts or investment accounts that earn interest. Generally, your interest income is going to be reported on Schedule B. A common question we receive is, the income is tax exempt overseas, or maybe you live in a country where they don't tax interest income. It's very common in a lot of the Asian countries. U.S. doesn't care. There's tax treaties with certain countries. You always want to double check just to be sure that there's no exemption, exclusion, or limitation. But for the most part, the U.S. taxes you on your worldwide income. That's going to include foreign interest income, whether it's tax exempt overseas or just not taxed in the foreign country that it's sourced. Doesn't really matter from a U.S. tax perspective. If you've already paid tax overseas on the income, you may qualify for a foreign tax credit for a portion or all of the taxes you already paid, depending on what your tax rate is in the U.S. and what the tax rate is you paid overseas. If you have a FATCA Form 8938 foreign asset reporting requirement and any of those assets reported interest income, generated interest income, you would also report that on the Form 8938 page 1. Another very common type of foreign income that many taxpayers have that are U.S. persons is dividend income. And just like the interest income, dividend income is reported on Schedule B. You have qualified dividends and you have ordinary dividends, right? Qualified dividends get taxed at 15% unless you're in the top tax bracket, then it jumps up to 20%. Ordinary dividends typically get taxed at your progressive tax rate. Whether or not you qualify as a qualified dividend, will depend on whether there's a treaty with the country, whether the dividend is from a company that trades on, like a NASDAQ equivalent or something. So something you want to check into because it could significantly reduce your tax rate. It may impact the foreign tax credit to some degree, but it's always better to report it as a qualified dividend versus an ordinary dividend, especially if you're in a higher tax rate. But just because you're in a country that's a treaty country doesn't mean it's automatically a qualified dividend. That's something that you want to look into because it could become a high red flag audit risk. Capital gains are a little different. Capital gains are reported on Schedule D, as in Diana. With Schedule D, you're going to have two main dates, right? The date you acquire it, or you purchased it, and the date you sell it. So something to keep in mind is that generally you're going to use spot rates for this particular equation. What you do is you figure out the day that you acquired the asset and what the spot exchange rate was on that date, and then what it was when you sold it. When you look at the IRS average rates, the Treasury Department quarterly rates, most of the time when you're dealing with capital gains, it's good to use the spot rates for the specific day, depending on whether you're buying or selling. You may want to refer to OANDA, and that's where you can get pretty accurate exchange rates for spot rates. There's some other types of foreign income that's common as well, especially rental income. When it comes to rental income, it's going to be reported on Schedule E, as in Everett. A few important things to keep in mind. Even if you net out a loss, you still have to report it. So what you would do is you report the income on Schedule E along with all the expenses that you had. So if it comes out to a negative or a loss, let's say, it's still reportable and you may be able to use that loss to offset income. But just because you have a loss doesn't mean you don't have to report it. Again, excuse the double negative. Just report it whether you made money off it or you didn't make money off it. One nice thing is in the U.S. you're allowed to depreciate the property, and that's a whole another video that we have. But essentially, you can depreciate the structure after 2018, I believe was the year they changed it, now over 30 years for residential property. If you are out of compliance for reporting in prior years before filing all this information in the current year, you want to consider one of the offshore disclosure programs to minimize or avoid penalties. There are various programs you can apply for. If you're willful or you can't certify under penalty of perjury that you're non-willful, you would use the Voluntary Disclosure Program, VDP. If you're non-willful, you have many more options available to you. You've got the streamlined domestic offshore procedures, streamlined foreign offshore procedures, delinquency procedures, delinquent FBAR procedures, and reasonable cause. After November 2020, the delinquent international information return submission procedures, which are a very popular alternative to streamlined, changed, and they basically morphed into your traditional reasonable cause statement. We have lots of free information available on our main website, goldenlawyers.com. If you think it's appropriate, you can always reach out, schedule a reduced fee initial consultation. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.